Hey everyone, this is Red with RedDragonLeo.com, and this is Thursday's update for Friday, August the 27th, the so-called turn date that we're all looking for. Was that turn date today, or is it tomorrow? So the question will be, is the GDP number going to rally the market, and we are going to just take off like a bat out of hell and just run right up here and start a new rally? Will that be it? And will Ben Bernanke come on TV or whatever? I don't know if he's on TV or not, but he'll be speaking at 10 a.m. tomorrow about the economy. So is he going to come up and say, okay, we're going to give you some more free money and, you know, get the helicopter out and start dropping money, free money to the market, and they rally on up? Is that the case? I don't know. I really can't answer that. I can tell you, looking at this chart, it certainly doesn't look like it. We're down. We're going down here. This is clearly got a touch here that we've been talking about, and it's not quite crossed yet, but it is touching. So, this is not good news for the. Actually, it is. It is by the red line is at which is the 50-day moving average is at 1103.21. So 1103.21, and the blue line is 1103 even. So it's 21 cents below it right now. So not that that really matters. I guess it could turn back up miraculously, and everything could be okay, and we could run on up here, and this head and shoulders that we're seeing here just won't play out, and everything will go well, and more people will get jobs, and the world will be saved, and the market won't crash. That's possible. I won't deny that. We could say that we are putting in a positive divergence here. Yes, we are. We're putting in a positive divergence. Maybe it just rolls on back up. I don't know. It doesn't look like it to me. This clearly looks like it was failed. Looks like it worked its all the way back up there, and couldn't make it into positive territory, and has rolled over and failed. Again, we're looking at the weekly chart here, folks. So this here, as you can see, is curling down. It didn't even touch. I can't see, if you look up close, I can't see where it even touched there. And then same thing here. We went up to the 50 and rejected it and turned right back down. This is the weekly, folks. So we're only down a little bit. If we don't sell off in the morning, I just in panic on what he's saying. Now maybe he stabilizes it, but that's at 10 o'clock. But I think it's going to sell off in the morning off the GDP numbers, regardless of what they are, just out of panic on what Ben Bernanke is going to say. You look at the daily, and look at this. We had this day up, and this day sideways here, and we went up and failed and turned around and come back down. And look at where we are at here on the RSI. We're at 33.89. When you're at 33, that means there are 2 people selling to every 1 person buying. If you're at 66, that means there's 2 people buying to every person selling. So that's bullish, and this is very bearish. And you look here the last 2 days, as the ADX line has gone up. Well, what happened here with the green positive DI line? Why did it not go up if we're rallying right here? Why did it not go up? Shouldn't it have curled up? It didn't. In fact, it went below here. That's not good. And we don't have any indication that we are turning back up here. We are just still pointing down. Today's bar was deeper than the previous bar. You can't hardly see it, but you look closely, you can see it is lower on a daily. So now you got the weekly, the daily, and of course we still got the monthly. If you want to look at the monthly again, it hasn't really changed. It's still pointing down. So when this thing crosses over, it's just going to get ugly. It's going to be ugly. Anyway, but that monthly, we're not going to look at that right now. The 60-minute chart, well, looky here where we're at. We are headed down into the morning on the 60-minute chart. That tells me the first hour. Now, sure, we could go down here, dip down, and just put in a lower histogram tower, and it'd be 1, 2, 3 negative histogram towers below trough lows there, and that would be a positive divergence, meaning we could rally next week. Certainly, that is possible, or rally, Monday at least next week. I don't know about next week, but this should certainly go down. Now, if it goes down here and goes below this line, then that's another story. But if it only goes down a little bit and turns and runs back up, that's possible. But everything is telling me that in the morning session, the first hour or so, up till 10 o'clock to find out what Ben Bernanke is going to say, the charts are telling me we're going to go down. And then there's the fear factor of what he's going to say. And then there's the GDP number we don't know what's going to be. Even if it's good, I just can't see them turning and rallying up until at least 10 o'clock to find out what Ben Bernanke is going to say about the economy. Just out of fear. I mean, I just don't see it, especially after this reversal. They rallied all day and hit this level here and turned tail and said goodbye and went right back down. So you can see we are pointing back down. We are not in oversold territory on the full stochastic, so this tells us we got a ways to run to get all the way down here to 20, which means that this can run down here. And I don't know how low it's going to go, or if it's going to go and put in a lower trough, or if it's going to just put in a shallow one to where you make that positive divergence. So that's possible as well. You look at it on the 15-minute chart, and you can see that it was going back up, and it was trying to get into positive territory there, and maybe put in a lower tower, which would have been a negative from this tower to this tower, or same thing with this one. Maybe put in a negative divergence as you'd put in a lower tower, but it couldn't really make it back up. It curled and sold off there into the end. It went back up and turned tail and went back down. So so this could curl back up in the morning. Sure, it could do that. But understand that that the 60 is a more powerful chart, and the 60 is pushing it down right now. So when you couple the fear factor of what Ben Bernanke is going to say at 10 and the GDP number, I don't know what it's going to be. I think it's going to have to be pretty good to get us a rally going, because we had a rally here, and they sold it off. So if it's a really good number, okay, maybe we'll gap up. Maybe we'll gap up and get outside of here and try to get up here again. And maybe we'll go up here to this line. Maybe this will turn back up. Maybe the 60 will just, roll back up, or not even go below zero. Just put in a second tower, which would be negative divergence, a smaller tower. Okay, it's possible. It is possible. I don't find it likely, but it is possible. So if the number's really good, we could gap up here to get outside this trend line. But then you're going to be hitting this one here at 1070. So, that would stop it for sure. And if you draw a line right here, here's another one. We only have a line right here, but if you draw a line, trend line from here to here, look at where that intercepts. Right there at 1070. So you got this line down here at 1070. So you got this line here at 1070. You've got double top resistance right here at 1060. And if you draw a line right here, where we're at right here, that's where there's more resistance there. There's all kinds of resistance points in this market right now. So it's not looking good. If we go over here to the 5-minute chart, 5-minute chart says we're getting ready to roll back down. Now 5 minutes, doesn't really tell you a lot, but it's a short chart, but it sold off there. So sure, it could go back up again. But the 5 minutes going down, the 60 minutes going down, the daily is going down, the weekly is going down. The only one even close to going up is the 15, and it curled over into the end. It failed. So getting a rally out of this market right now is going to take some, money. Ben Bernanke is going to have to come up and say, yeah, we're going to give you stimulus package 2 or 3 or 4, or ever how many they've had. Who knows? Secretly, how many they've actually injected into the market one way or another. I just, so if that's the case, if that does happen, again, I just give it low odds of rallying, of gapping up in the morning. I give it low odds. But it's possible if the GDP number does come in good, it's a possibility it could gap up. So if the GDP number comes in bad, of course it's going to just tank into the beginning. If the GDP number comes in, just meets expectations, I think the market will be a little bit confused and hesitant because they won't know what to do. That's because of the Ben Bernanke speaking. They're like, okay, so it met expectations. Now what? So, and that might be what it'll do. Just meet expectations and confuse people. A good number, like I said, could cause a gap up, and that would make a run for here. That'd be like a A, B, C move. But just the way this market is looking today, it was really, really struggling. Now, I don't have a chart here of the dollar, but I looked at the UUP, and when the market went up, and understand that the dollar is the inverse of the market. So when the market went up here in the morning session, the UUP, or the dollar index, the DXY, I guess, it was going down, just the opposite, because they've got an inverse relationship, okay? So the dollar went down and the market went up. Then the dollar started catching a bid just a little bit and traded sideways. Well, the market sold off a little bit and traded sideways. Then until the close, the dollar did not go up and cause this rally. In fact, the dollar went down, but yet the market went down. The market should have caught a bid, and it didn't. So if the market can't catch a bid with the dollar going, with the dollar going down, that's really bearish, really bearish. So tomorrow, I just, I can't see any logical reason for this market to rally. It's had its relief rally as far as I can see, and I think that's about it for now. I mean, I'm not ruling out the possibility again that we couldn't be an A, B, C move to there, but it's going to meet a ton of resistance if it hits 1070, and that is certainly possible. But for right now, we're looking like we're at least going to go down into the morning, and into the 10 o'clock time frame when Ben Bernanke speaks, and then when he speaks, well, who knows? There'll probably be some shakeout moves, up, down, who knows? I don't think he's going to say anything good or bad. He'll try not to say anything bad, but either way, I just, unless he really miraculously saves his economy somehow, and, I don't know. I just don't know. It's just a wild card. But the charts tell me we're at least going to go down, at least into the morning, and maybe roll back up into the afternoon if Ben Bernanke saves the day or something like that. But if he doesn't save the day and the GDP numbers are really bad, then we're going to have a big sell-off tomorrow. So, so it's a tough call. It's a tough call. But that's kind of what I see in the charts there. Hopefully that makes some sense to you. And I guess that's it. Good luck to everyone who's brave enough to go long, and all those that are brave enough to go short. It's because of this. The charts say we go down, but there's always that wild card with the stimulus package coming out and some fake GDP numbers that aren't real, that we know that are manipulated or whatever. So we know how that game goes by now. So, all right, gang, that's it. Good luck to everyone tomorrow. See you in the chat, or see you on the blog.